Our latest video attempts to answer all your questions on what's happening with manufacturing investment in 2 minutes. This is our 5th annual monitor in partnership with Santander, and it starts with some good news. Manufacturing investment as a share of turnover has taken a step up in the past 2 years after a wobble in last year's monitor. Output across the sector has been on the rise, and this is driving additional investment by firms. This increase was predicted. Last year, a narrow majority of companies indicated plans to up their spend, but the outlook is less rosy. The proportion of companies planning to raise their capital expenditure has fallen back from just over half to only a third, the lowest in 5 years. And looking only at SMEs, it's weaker still, with only a quarter looking at planned increases. What's the problem? In short, it's not a lack of need or ambition, it's uncertainty. Uncertainty about future order books, followed by political uncertainty. You're probably wondering if that uncertainty stems from Brexit, and you'd be right. Last year, just under half of manufacturers said the state of the negotiations were having a negative impact on their investment plans, and that's higher again this year. We can't afford this cloud of uncertainty to linger for too long. Private sector investment growth is already lagging behind competitors, a trend the OECD expects to continue into next year. And historically, the UK's weaker investment picture is thought to be a contributing factor to the UK's flatlining productivity performance, something we know the Chancellor and his officials at HM Treasury have some concerns about. There's just over a month until the autumn budget, and we need to think seriously about how we can counteract some of this uncertainty and spur on higher levels of investment in the coming years. We'll be setting out our ideas on this in the coming weeks. In the meantime, you can read more about our research at eef.org.uk.